Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, May 1st, 2008. Well, we got what we thought we would get today, and it was so interesting going in yesterday's action because it kind of put this bearish tone over the market. And my partner and I kept on discussing how it just was not this easy. You know, yes, we've been calling in TheMoneyStocks.com. It has been calling that there's going to be a pullback in the market coming, but it wasn't supposed to work out so beautifully, because when it works out beautifully, like yesterday, where we're up going into the Fed announces, we sell off, and when it works out that beautifully and continues down, every average Joe, every amateur out there, every media player has called it, and it just doesn't work that way. You guys that follow these videos know by now that when everyone thinks it's going one way, you know it's not going that way. So sure enough today, folks, a beautiful rally in the markets, which was again on very light volume, which again makes us believe that we're right on the precipice of our turn date here, which is looking more and more like it's going to come in the next 3 to 4 trading days, and tomorrow being May 2nd, anywhere through tomorrow and Monday, Tuesday, Wednesday. It looks like it's going to occur in one of those days, and we do expect the market to be topping out here on this last move up. Now, there is a possibility we see a little more upside in this market, but this was primarily that last move that we talked about multiple times over the last week or so that we expected in this market prior to the top out. So it's key to understand that and realize that there may be a little tiny bit more, but this is essentially it, what you're seeing here. Whether or not we see a gap up tomorrow or a gap down on the jobs number, and again, the jobs number is coming out tomorrow, is up in the air, and we'll kind of analyze it as we go, but the turn date has come now over the next few days. We're expecting that to be here. So the NASDAQ today was up about 68 points, a tremendous rally on the NASDAQ. The Dow was up 190 points, and the S&P 500 was up 24 points. And again, as I mentioned, guys, I can't stress this enough how my partner and I talked yesterday about how it was not this easy. And yesterday, we talked to each other on the phone last night, and we said, listen, we expect a rally. There's got to be one more push. And sure enough, it happened today, as accurate as our intuition is here. So let's get it started on the charts, guys, because as we flip to the intraday, and we always look at the intraday 10-minute for those of you that are new to the videos. I want to focus on the moves today, more so on the daily, because this is what we're focusing on, the turn date on the day chart instead of the intraday. But it's important for us to look at the chart as a whole and look at the intraday analysis. So first, starting out, you guys, we basically had what was known as a flat open. I mean, you can see right here, all the way up to around 10 o'clock, is when we started the rally. So right here is 10 o'clock, and this is where we started to take off. So you can see that even the market dipped a little lower. So you had those amateurs jumping on board short even in the early morning. And that's again when we saw some signals out in the market that we may rally. For instance, a great signal was the put-call ratio, which we follow on an intraday level. And the put-call ratio, surprisingly enough, when the market was flat this morning, was up 1.25-ish. And that was about the 10 o'clock number, I believe, or maybe the 10:30 number. And that's a signal that there are a lot more puts on the market than calls. And when there are a lot more one way, you guys know how we feel it. We feel it goes the opposite way often, although that isn't at a range where it makes a huge difference. But nonetheless, it was something that kind of caught our eye. And I remember talking about in the chat room how we were surprised that was as high as it was. So sure enough, the market began to rally here. And it was just a tremendous rally. Really went up here, paused going right into lunch, and then during lunch, right around 12 o'clock, it really took off. And this market had buy programs, and you can see these larger green candles. Here's one, then you had a pause candle, and here's another one, pause candle, and another one, pause candle. And we basically topped out right around 1 o'clock. Then you saw a pullback, a retest, a pullback into the 20, and a retest. And you see this little pattern here, triple top pattern, and the market closed basically at the highs of the day here. A beautiful move up. But again, there's something amiss here, and this is what we've been talking about multiple times, is that the volume, even on a day when we rallied this much, if this was back in January, February, or even last year on a rally day, you would have seen the contract size on the E-Minis be 2.53 million. Today, we didn't even do 2 million. I'm going to double check that number, but I don't believe we did. We'll even look at the SPY. So let's flip to the SPY daily and look at the volume. So here's yesterday. The red candle was yesterday on the Fed. And look at today. So yesterday there was no volume in the market till 2:15 when the Fed came out. And then we saw pickup in volume, and even in yesterday when there was no volume whatsoever until the Fed, we still did more yesterday in volume than today. Yet today the markets were up huge. So again, you have to base your analysis, and again, we talk about price, pattern, and time being so key, and really time is becoming more and more accurate here, and more of a key as well as pattern. But again, volume is a good indicator, and it's just more of a signal to you. And we have to realize that this market, look at the volume here as compared to over here, and then look at the move up. Alright, so you have from this point right here, which is where we draw the line right down here, all the way up here. Look at the market. The SPY has basically gone from 127, 126 to 141, which is percentage-wise huge. You're talking about a 10-12% move here in the markets on very, very light volume. So that does bear watching. That does bear concern to us. And again, as we feel here, the turn date is literally right around the corner within the next 3 to 4 working market days. So let's keep a close eye here. It could be any day now. And this is where today you begin to, we really, what we're doing, and again, I don't want to talk about the swing trade alerts too much, but all our swing trades are pretty much in the money at this stage of the game. We're basically moving all our stops right underneath at this point and keeping our targets where they are. So if we go a little higher, we hit the targets, but even if we start to come down, we're immediately out with a good profit on all our swing trades. And we'll just move out at that stage of the game because this is what we believe, so we're not going to leave our stops. Our stops, worst case, will be flat at this point or in the money on all swing trade alerts. And this is where we're taking profits off the table, and you just got to book profits at this stage of the game because on no volume you can't trust a market. Now, in all fairness, we should look at the upside as well as the downside. And on the downside, you got to look for a pullback. I would guess to this point you'll have support here, number 1 at the 20, but then you'll have the 50 support as well as support in this range. And I drew these yesterday as well, so it's important to keep in mind what we went over yesterday. These are various quick support lines. I'll have to, as we come down, we do more accurate analysis to get you guys the very key levels. But on the E-Minis and on the SPX and the S&P, you can look for that 1421. 1421 is being a key level on the E-Minis here, which is about 10 points away as a possible move. That would be the high scenario, I would guess, for a market to move up in that range, which is possible, by the way. There is a chance of the jobs number coming out good tomorrow, and in that case, you may see a gap up. But again, we're very closely watching the QID at this stage of the game too. Now, the QID is 2 times short the NASDAQ, and money flow has been going into the NASDAQ, but it doesn't mean it can't pull back. And you can see how much the NASDAQ has fallen. It is beginning to get oversold in this range, and I want to just point out what we did see today was a gap fill right here on the chart. See that gap right here? If you draw that all the way over, and you can't, my thing's not big enough, but I'll show you what I'm talking about here. So here's the gap on the chart, and you actually had a break of the gap window, which was right here, and a fill of the gap, which was right here on the QID today. That's a little off here. I should raise that a little bit so it actually goes right into there. But in any case, a fill of the gap there may show us some support on the QID on the chart. So we are watching this very closely, as on a pullback in the markets, the QID could get a nice bounce up in this range, possibly as high as here, or if the 20 moving average comes through, you'd look for the first hit of the 20 to be your exit. And you did see an uptick here in volume on the QID as well. Possible exhaustion move to the downside. Most volume in multiple weeks on the QID. So we are watching that very carefully. The SDS is the same type of situation, although I don't think it filled the gap precisely, so there may be a little more downside in that one, as well as the QID. Nothing says that it can't go a little lower, but this is where you start to dip your toe in the water on the short side. And remember, just like on the long side, when Bear Stearns came out and InTheMoneyStocks.com called a buy on the market at that lows when everyone else was jumping out of windows saying this market's going to crash, we said, you know what, we're dipping our toe in here. And as we dipped our toe in and the market got a little stronger, we dipped more of our foot in and so forth, inching in. And the same thing goes on the downside. We always maintain stops. We always inch our toe in. And this way we avoid, if we should be off by a little bit, you never throw all your eggs in one basket and take a hit. You always keep tight stops as always and look to see a small loss as worst case scenario as you inch your toe in the play. All right, so very interesting here. I also want to show some other interesting things that went on in this market, and it's a very weird market today. Not only did we have this crazy rally today that InTheMoneyStocks.com had talked about being one more push in the market possible, and it does look like this was it. but also you had stocks like Baidu, Apple, and RIM all up on the day. But let's talk about where they closed. And I guess I'll show this in the level 2. It's easier to show. And this is just something I found fascinating. Look at Baidu. Where did it close? 370. Where did RIM close? 128. Look at these on the dot. All right. And Apple, where did it close? 180 on the dot. Now, you just have to kind of look at yourself and say, you know, take a look and say, this is a little strange. But all those 3 stocks closed directly on the even number, on the penny of 00, which is an interesting little thing to point out as we talk about this video. So just looking at the market overall, here's the NASDAQ daily chart. You can see the blast effect. There is a small chance we get to this 200, but at this stage of the game, we're starting to accumulate or looking to take short positions at this top. Have a wonderful day, folks. Come join the Swing Trade Alerts, the chat room, the options alerts, private and institutional consulting, and get in contact with us if you have any questions. Have a wonderful day. We'll see where this market goes tomorrow on the jobs report. Take care.